All right, welcome to Forex Fridays with Deontay, Forensic Forex, and we're going to be going over a few topics tonight. We're going to be going over the weekly range review. We're going to be going over bullish versus bearish months and its characteristics, and then we're going to go through a pair filtering process as well. So I hope you guys had a great trading week. I hope you guys had a great trading month. Man, the year is flying by so fast. We're already pretty much done with the year. We're heading into September now. So I hope you guys are trading safely and managing your risk and compounding your account each and every month. So let's begin with our first topic. So tonight, our first topic is going to be range review. So the methodology of opening prices, right? The fair value or opening bid of the weekly candle, the true day opening range, right? Midnight opening price, and the kill zones opening price. So keep that in mind as we go through all these ideas, because this methodology is what going to give you a lot more consistency versus other traders. You're going to get a lot more accurate trade ideas. We're going to look at DXY, EU, and UCAD. So we're going to look at some inversely correlated pairs so we get to see both sides. So first and foremost, what you see on my chart is the DXY. Let's turn do not disturb on. Do not disturb. Great. You can see that it's very colorful on my chart. You can see there is gray areas. There is a red, blue, and yellow area and a green area. So red is London session. Blue is New York session. The yellow session is London close. The green is Asian session. And all the other gray zones that you see is dead zones. And we'll get a little further into discussion what those are and how we frame trades around those sessions. Now, the methodology behind what I'm saying with SOP, as you can see on this chart, this is the opening price of the weekly candle. So if we were to go on the weekly chart, that's the opening price right here. It opens right down there at this candle down there. That's the opening price that you're seeing via 1 hour that I'm showing right here. That's the opening price. Anything above that is a premium. You're going to find ideal sell scenarios above in a premium. Anything below it is a discount. You're going to find ideal buy conditions below it. Now, not every single time while price is being above in a premium is a sell going to be warranted. Same thing vice versa. Every time price is below in a discount doesn't mean a buy is going to be warranted. Time and price and your intermarket analysis needs to align. Let's take a look at how price this week pretty much progressed. We can see Tuesday makes the low of the week and Friday makes the high of the week. So very opposite ends. Tuesday low of the week forms below the weekly opening price. So at some point, price action pulled traders down below the open to find an ideal buy scenario that pushed price up here to Friday. Now let's take a look at some intraday ideas, New York and London. So let's start off with the London model first. Now I know some brokers and prop firms do allow you to trade the London session, but we're going to take a look at it anyways because I think it's very important and very crucial. So we're going to go back between midnight and 2 a.m. So this is midnight right here, midnight 2, and we're going to drop down to the 15-minute time frame. So this is going to be the London idea. So how I came up with the London model is simply looking for consolidation prior to the kill zone and looking for the market to run one side and then run to the other, purge and revert. Now, all markets start in a consolidation. That's what you're looking for primarily as a trader. You want the market to be accumulating. That is when the market is quiet and in a standstill. There's a battle. Buy side orders and sell side orders are accumulating. That's a market sentiment. That's the direct definition of what market sentiment is. Orders are building up on both sides, buy stop orders and sell stop orders. That's when you see that market start ranging. And at specific times, the market does range. And this is one of the dead zones. So let's see if I can highlight it here for you. There we go. So this is one of the dead zones. And I like to call this one the Asian dead zone because it happens after the Asian session. So on this time frame, we're going to be framing all the buy side and sell side liquidity pools just prior to London session. So from midnight to 2, we're going to find all the unbroken swing highs and swing lows that we have available. That's the key concept here. It has to be unbroken liquidity pools. It cannot be a swing high or swing low that's already broken. We're looking for what is still available to price action. Now, we're going to mark off the opening price for the kill zone. I like to start my kill zone off at 2 a.m. opening price for London. So we'll keep it as acronym LOP, London opening price, so we're not confused. Now, if you guys had to take an educated guess, when price is above London opening price, what condition are we in? Are we in a premium or discount? I'm asking the chat. Anybody can answer that. When price is above LOP, is it a premium or discount? Thank you, Nick. We're in a premium, right? Shout out to Nick for answering the question, right? Thank you, guys. Good answer. Yes, premium. P, yes, absolutely. We're above. Now, anything vice versa, clearly, right? If we're in a premium, that means anything below is a discount. So let's mark that off in price. We're going to take our time because sometimes I know I can get very enthusiastic and I could get very stimulated and I'm just so riled up and trying to keep it calm today. Did I just open something? I'm good. Okay. So we got discount, like we said here. And we got premium. Thank you guys for engaging with the question. Now we also have another confluence, right? We have midnight opening price, which is here. Now you can almost assume the same idea too, right? We'll put London opening price at the bottom. And then we'll put midnight opening price right up here. Perfect. It lines up with the arrows too. So anything above midnight opening price is a premium as well. Anything below midnight opening price is a discount. Great. Where we currently are and where we stand is above Sunday's opening price right there. That's the opening price, if I'm correct, on where I marked it off right there. That's our opening price. Now we possibly can find a triple confluence idea or a triple premium idea because we're above the weekly opening price. It has very huge precedence on the price action. So let's play it forward. Play it forward, play it forward, play it forward. And as you can see, it looked like price was going to run sell side for a second, right? This is why I don't like to chase price. Just because the market starts leaving you or you see the market start to, ramp up or start to be volatile and pick up in speed doesn't mean you have to enter the market. I like to wait. All of a sudden, it just turns around, it runs up. So it fakes a lot of traders out. So anybody that was possibly short on the DXY was burnt out if they didn't take partials or take profit or whatever the case may be. Price turns around very quickly and it runs out buy side liquidity pool. Go emojis. There. Bang. Now, as soon as that happens, my mind tells me, okay, what do we have rest? We have sell side down here, sell side orders, right below that low. We also have one that forms during London session too. There's a swing low here, but it's not like I'm forgetting about it, but I'm just really focused on this time period here and what we have during the Asian lunch. Put that on the chart. So it's 12 a.m. to 2 a.m. No trading is permitted in this time period. I wouldn't recommend it. Right, that's all I got to say about that. I would recommend you trade the London or the kill zone, right? After this, what I'm looking for is an opportunity now to see if price can revert back down to sell side down here. I want to see if price is going to go from breaking this now to going back down here. And the fact that we are lining up for a triple confluence idea is even more reason for me to want to be investigated, right? Or invested in looking for shorts. So what I do is I leave the 15-minute time frame and I go down to the 1-minute time frame. Now, many folks in the community may say, well, traders shouldn't be trading on the 1-minute time frame. It is very possible to trade on the 1-minute time frame for those that are in the community and have been, been educated or been learning through me. You've seen many times where we're able to find a lower time frame entry on the 1-minute time frame. So we go down to the 1 minute. That's the next step. And we're looking for a specific entry point. It's generally just going to be a fair value gap that forms first, right? The very first fair value gap that forms after breaking the buy side. Or it's going to be a fair value gap that runs through a swing low. and that swing low was inside of the fair value gap. So let's play it forward till we get that idea. So you see how price comes down very quickly, right? And there goes the very first fair value gap. We'll just mark it off just so we have an idea. So that's the very first fair value gap. See how dynamic price is there off of that? Nice reaction. But let's keep playing it forward. See what we get. The price comes back up all the way up there. And there goes our entry idea that I would recommend traders looking for. This is the one I personally like to take. So there goes that speed through the swing point right there. Right? Price comes down and runs through that swing point with speed. Now, I'm just interchanging the terms. This is just a fair value gap, right? Some type of inefficiency to the downside. That's where I will look to go short. Now, I know this is the DXY. Like I said, I don't know if there's not a lot of brokers I know that allow traders to trade the DXY. And I know there's not a lot of prop firms that allow you to trade the DXY. But if you happen to be one of those, if you happen to have one of those brokers, you can still utilize the same idea here. So we're waiting for price to return back into that fair value gap to go short. We're not in short yet until price gets back into that fair value gap. And let's see if it does. There we go. Price runs in, right? That's that entry drill, right? We're looking for price to tap the bottom of that fair value gap. That's where we're going to set our market order. Or if you do have time, you can set a pending order there, a pending sell limit order there, and set up your TP and stop loss. Right? If you have time, if it pulls away and you have time to put it in, you could do that. So it takes a little pressure off of you. So you don't have to sit there trying to guess, okay, when am I going to click sell? And at that point, you believe in the trade, you risk properly. I wouldn't recommend risking any more than 3%, at most 2%, if you're a beginning trader. Until you're profitable, then I would start to say, okay, you can start to be more risky in these trade ideas. And you can see how price trades off. Now, I want you to notice where our entry idea is forming. Where did our entry idea form? In a premium or discount? Asking in the chat this question. Thank you. Premium. Shout out to the chat, right? This fair value gap physically formed in a premium territory. It didn't form in a discount. It didn't form below London's opening price. It didn't form below midnight opening price. It didn't form below Sunday's opening price, which is all the way down here. So we have that triple confluence idea, and we take that shot, and price went short. Price went all the way back down and reverted back down to that sell side. So bang, we got that again. We take out the money down there. That's the framework. That's the London model. What I just showed you is the London model. Now, I'm not saying the pair that you're watching every single day is going to produce this model. But I do know there's a handful of pairs throughout the week that will show you this same sequence. Rinse and repeat. And this is how you have a lot more structure and framework going throughout the weekly range. You could frame that around news. You could frame that around certain pairs that are more volatile because the news is mainly impacting that currency pair or one of the currencies in that pair. Fast forward here, 5 minutes, so we can actually show the TP getting hit. There you go. So TP hit. So even though it didn't finally hit the TP during the kill zone that we're looking to trade in, you can see it still gets down there if we held the trade. Now, many times I know people may want to trail their stop loss. They might trail their stop loss prematurely and get stopped out. That happens very often. Don't think it's just you. You're not alone in that. I still get my stop loss knocked out when I have a trailing stop. It happens. It's inevitable. The market will pull back in time and knock you out and continue to sell off. Oftentimes, my best advice, if you're going to try and catch a larger move, try not to move your stop loss. You'll see more times than not, if you leave your original stop loss at its first placement and you hold, you might be able to squeeze a lot more than trailing your stop. And that is the first London model for tonight. So you see that was DXY. That was a great trade idea. And we also have a New York model here on Tuesday. So let's take a look at that too. So it's happening on Tuesday, an ideal trading day, not Monday, not Friday. It's happening on a Tuesday where a lot more of the volume is coming in midweek. There's news events that are happening mainly around Tuesday, Wednesday, Thursday, and sometimes Friday. even Monday too, but that midweek portion of the week, that's where you want to be looking for ideal trade ideas or looking for these conditions. Now let's take a look at, we'll delete this now. We don't need this anymore. The only thing that we do need though is midnight opening price. So let's drag that out and we'll write that back up on here. So midnight opening price. So this is true day open for Tuesday. The daily candle technically opens Monday for DXY, I think is 7 p.m. I think for currency pairs, it's 5:03 or 5:04 p.m. So technically, this is not the true day start of the daily candle. This is just the algorithmic true day open, right? Where the algorithm resets its premium and discount levels. So that's Tuesday there. Now let's take a look at the New York model. So the New York model is very similar. It's going to be comprised around another dead zone. You see this dead zone? Oftentimes you'll see consolidation. The market's going to range. I'm not saying every single dead zone is going to give you accumulation or some type of consolidation, but be cautious of trying to trade during these time periods. Now, this dead zone is the London lunch. This is 5 a.m. to 7 a.m. Again, no trading should be permitted. Unless you're already going to trade prior, then cool, you hold your trade. But I wouldn't go into looking for trades. It's a no-no. Leave that alone. And then we got our New York session here. And we know that's from 7 to 10 a.m. Again, we have another kill zone, right? That methodology that we're talking about. New York open, NYO. We'll drag it out so we can see it. Again, there goes our premium and discount levels. I don't even have to put it on the chart. You guys should be able to conceptualize what I'm showing here on the chart. Right? Anything above these price points is a premium. So let's play it forward. So we got buy side here. It's buy side liquidity. That's a swing high. So that's why I'm calling it buy side. We got another one right up here. So we got relatively equal highs. Look at that. These swing highs are clean, very clean. We got a swing low here, which is also the lowest low of the session. So that's sell side. So we got both sides here. Got money up here, right? Liquidity. I just like to keep it pretty simple. Money there, money there. The stop order is above and below those lows. So anybody that was long probably has a stop loss below that low. Anybody that was short probably has a stop loss above that high. Just inside of the session. I know there's other liquidity pools outside of the session. I know it's very obvious. There's a swing high here. There's a swing high here. I know. But let's pay attention and focus our eyes right here. Just put the blinders on, focus in that gray area. Let's play it forward, see what happens. So you play it forward, price comes down. Because see, price does take out what? A swing low. 1, 2, 3. Here. But where are we? There's a conflict of interest because price is below New York opening price and below midnight opening price. So it's in a discount for these two conditions, but it's still above Sunday's opening price. So you're in a premium for the weekly, you're in the discount for the kill zone, and you're in the discount for the day intraday. So there's some conflicting data here. Not saying every time you're going to be looking for a triple confluence idea or double confluence idea, but I would like for traders to niche and be very specific in what they want to look for. Look for that triple confluence idea, especially if you're a new trader. So let's play it forward. Let's say we're going to ignore the fact that price ran that swing low, right? There's also sell side down here. Right, let's play it forward. Play it forward, play it forward, play it forward. Now, all of a sudden, everything starts to line up again, right? Even after running that sell side, you can see how price takes out the swing low and it runs back up to what? Buy side. Now price is in a triple confluence idea now. Now we're above midnight, we're above New York opening price, and we're above the weekly opening price down here. Now we could possibly go down to the 1 minute time frame and look for a short. Let's go down to the 1 minute time frame and see what we can find. So we're on the 1 minute time frame. We'll get rid of this line here. Get rid of that. And we're looking for that same entry idea. Very simple idea. It could be the very first fair value gap that forms to the downside or the fair value gap with that swing point rated through. So let's keep playing it forward. We got a volume imbalance too. Let me not forget about other PD arrays too. We got breakers, mitigations. Those could be things too, right? That's a volume imbalance here. We'll put it in purple. Make it a little different color. We got a volume imbalance there. Great. Let's keep playing it forward. You got another one here. I'm not going to mark off every single one. We got another one here. We got an IFVG too. IFVG here too. Just many PD arrays that form. Now there goes the one I like. There it is. There goes that swing low, right? 1, 2, 3. For those that don't know what a swing low is, and it might be a little confusing, it might be a new trader. A swing low simply is a candle between 2 points that have a higher low on the left and the right. This candle's low is higher on the left, and this candle's low is higher on the right. So this makes this the swing point or the swing low, to be specific. There goes that fair value gap from here down here. There to there. This is the entry I love to see. It happens very often in the marketplace. And we would be going to look short here. So you have that institutional order flow entry drill, right? As soon as price taps the bottom side, the discount side of the fair value gap, not the premium side, not the top side of where the fair value gap starts. The discount side, the bottom portion of this fair value gap, as soon as price touches that, you're looking to go short. We'll zoom out so you can get that effect, right? Where we're looking to go short. And zoom out too far. Press play. There you go. You're in short now. Do you see? This entry idea literally forms above the midnight opening price there. It also forms above Kill Zone's opening price, the New York, and the weekly opening price. And we'll play it forward, speed it up. And look at that. Look at how it drops, man. And it gets all the way down to sell side. TP hit. So there goes your New York model. Very simple and less stressful than a lot of other things I've seen in the trading space. That's the New York model, right? That's our first New York model for the night. And we'll play it forward. And I don't think there's anything left here for us to talk about on the DXY. Oh, we also have a Wednesday model. So let's look at Wednesday. So now go back right before here. Again, we'll speed it up a little bit for this one so we can get to the next pair. I'm just taking my time, so I'm not rushing for you guys. So when you guys go back to watch the video, it makes sense. Sell side, I'm gonna move a little fast here. Buy side. That's our opening price. We'll just call it there. MIO. Make it black. Find the opening price for that day. There you go. That's midnight opening price. We'll put it over here. MOP. Midnight opening price. MOP, SOP, and NYO. Let's play it forward. Play it forward. Play it forward. Play it forward. Boom. Price runs buy side. Bang. Runs that buy side. What do we have left? We got this sell side down here. Great. We're going to be looking for a short opportunity. We're in a triple confluence idea. Oh, this is off. It's supposed to be right here. There we go. And now we're looking to go short. See all this that we have to play with? You got all these sell sides down here on the 1 minute. Right, a lot more data coming from the 15-minute time frame. We'll play it forward. And look at how it keeps going up. We don't chase that. I personally don't chase it. We leave it alone. Zoom in. I'll take a look at something. This is the very first fair value gap that forms. Just want to keep a note of it, right? Just to show you guys. Very first one that forms. There's another one that forms up here. Just keep playing it. So, whoa, slow down, partner. And there goes, there's a volume imbalance up there too. Is there? Yeah, there's one right there in the purple. Put it here for you guys. These candles don't touch. Volume imbalance there. And there goes the speed or fair value gap. There we go. Mixed in with another volume imbalance right there too. So there's a lot of stacked PD arrays in the area. Right, you also got, let me see, does it fail to break that high? You also got a little breaker here. Last down close candle. Price goes what? Price does this. Price runs up, makes a high, comes down, runs that high out just briefly, comes back down. If price trades back into that, you could go short. These are all the ideas are there. And we would look to go short here. You can see it already tapped it. The next candle after the fair value gap, it literally started, it tapped into it and it's getting ready to go. Play it forward. Take a look at what we get. We're not afraid about the drawdown. The reason we're not afraid about the drawdown is because we're risking properly. We don't care and TP hit. We don't care if it pulls back and hits our stop loss. Because that trade that you take on, you must be comfortable enough to take the trade. If you're not comfortable taking that trade, there's going to be signs, of course, right? There's going to be physiological signs. Your body's going to be, you're either going to be nervous, you're going to be sweating, you'll be tapping your foot, you're going to be biting your nails, you're going to be doing something that shows signs of anxiety. And that would most likely tell you that, yo, you took too much risk on this trade. You should probably cut the risk so that you can actually breathe and watch this trade. If you're taking too much risk, pay attention to your physiological responses. Your body will literally tell you, you know, you're probably lying to yourself. You know, oh, I could take this amount of risk. But you know, if it were to pull back and hit that stop loss, or even if it doesn't even get to the stop loss and you're risking way too much, before it even hits your stop loss, you're already panicking. You're worried about the trade. You're babysitting the trade. That's a sign. Don't lie to yourself. Your body will tell the truth every time. Do not lie to yourself. And price comes out and takes out the sell side liquidity pool here. Let's speed it up. Right, that's that New York session right there. That's that London close reversal. London close reversal did opposite to what New York session did. New York session was mainly up. Look at how London close reverses that. Keep that in mind. Each one of these kill zones have different characteristics. And oh yeah, TP was already hit. I don't know why I'm playing it still, but that's the New York model there. Let's go back to it briefly just to show it again. So we're all on the same page before we jump onto this different pair. Because everybody thinks, oh, it's hindsight. You can never catch these ideas. You can. If you're sitting there waiting for it, you can. I know we're here showing it, backtesting it. It's not like I took this DXY trade. I did not. Right? But for the paid Discord group, you guys saw the live trades that we took. For the Telegram channel, you guys saw the trade ideas that we sent after we were able to have a successful trade. Again, the entry idea is forming in a triple confluence above NYO, above MOP, and above SOP. That's where the entry fair value gap that I like to take is half forming. Triple confluence idea. This thing is a cannon. Not every time is the triple confluence idea going to be perfect or you're going to always have a winner. I'm not sitting here telling you that because I went through and I went to find the ideal days that had the successful days. You're going to look at some days. I'm going to show you one day where the model does form and we don't even get the entry. It just leaves us in the dust. So be aware of that. Don't think it's picture perfect because I'm showing it to you here, back testing it. I'm just here trying to show you guys lots of examples. Best believe there's losers. I take losses as well. It's not perfect in the way I'm showing it. We're just showing this for reinforcement, right? To understand and comprehend the material. All right, let's move on to Euro. Or should we do UCAD first? We'll do Euro. We'll do EU first. All right, EU. Go on the hourly chart. Put it all the way forward. And just take a look, right? Just take a look. Take all this stuff off the chart, right? I like my chart to be clean. I ain't got nothing against other people's charts. Hey, do what you want with your chart. But me personally, chart's got to be clean, right? I want to be able to see what I'm actually doing here. So let's move this up a little bit. Oops. This can move up just a tad bit. Oh, why am I not getting it? All right, everything wants to move, whatever. So there we go. All right, cool. Look at where the high of the week is forming and look at where the low of the week is forming. The high of the week landed on Sunday. Look at that, right? It didn't land on Tuesday, right? It's a bearish week. Most people would assume that the high of the week is going to form on either one of these days, Tuesday, Wednesday, and even possibly Thursday. Sometimes even Monday. But we can see on this one for this week, it was Sunday. Sunday was the high of the week. So very interesting to see. Just observing, right? What's the observations as a trader? Sunday makes the high of the week. Friday makes the low of the week. And we can see how price is reacting around Sunday's opening price. Look how sensitive that price point is. Do you see how price is running around? It taps into it here, taps into it here, taps into it here, and runs away. It literally taps to it on the pip or pretty close to the pip of that opening price and then runs away. Amazing. It's amazing to see that. Let's just take a look at the New York model on Tuesday. Let's bring it back right before 7 o'clock. Now let's put on the session indicator, put on the dead zone. Look at that consolidation. And let's go on the 15-minute chart. I like to frame everything from the 15-minute chart. That's my personal perspective and how I like to do it. You may want to frame your liquidity pools via 5-minute. That's not a problem as well. You can do that as well. And we got it from 10. Again, this time period again for people, because people ask me all the time, this is going to be our London lunch. No trading is permitted. This is 5 a.m. to 7 a.m. Look at the consolidation that's occurring again. You really want to trade this? Do you really want to risk trading this when you could trade a more volatile trading session when the market makers are actually stepping into the market and there's a volume behind the market? Why trade this when it's dead? It's lunch. They went on break. That's why I call it the lunch. Or I think, I'm not sure if I heard someone else call it the lunch, but this is the lunch. This is the lunch zone. So we got the opening price here. So price is gonna, New York open, and then we're gonna mark off our sell side. Mark off our buy side, and then we're gonna play it forward and see what happens. Play it forward and see, bang, price runs out what? Sell side. Where are we relative to midnight opening price? So let's find midnight. Where's midnight opening price? Right here. MOP. Again, I want to thank you guys again for coming out and watching and learning from me. I really do appreciate it. I appreciate all the support. I appreciate all the questions, the kind words. I truly do appreciate it. Thank you guys. Your time is very valuable to me. I don't want to waste your time. All right. Price run sell side. What do we have left in liquidity terms? Do we have buy side left or sell side left based on what we have here? I'm asking the chat, trying to engage so it's not boring for you guys. Take your time. Anybody can answer. What's left, buy side or sell side based on this dead zone? Buy side. Thank you. Thank you, guys. Awesome. Shout out to the chat. All right, just checking to see if you guys are still awake. So we have buy side left. So there's money residing above this high here. There's liquidity. There's no more liquidity down here because we've already rated it. So instead of it looking like a money bag, I like to put it here. Bang. Knocks it out. Price is now below SOP up here. This dash line up here is the weekly opening price. Don't forget. That's the start of the weekly opening price right there. 1700. That's the start of that weekly candle. We have a triple confluence idea here on the Tuesday. Go down to the 1 minute. And we're looking for that entry idea. Look at how they even start the session too, right? All of this is nonsense to me personally. Sometimes the kill zone will get going right away, right? It's dynamic right out the gate. It just shoots in one direction very fast. Let me take my AirPods out before I disconnect or connect to my music. Okay. At this point, we could look for the very first fair value gap that forms, or look for the entry idea that I like to prefer. So let's keep playing it forward. After running that sell side, yep. Oh, there it is. The first fair value gap that forms is also the entry that we like to look for. So that's great. So there goes our fair value gap that runs through. Zoom in. Look at how it looks. I want you to take a look at how it looks. Sometimes it looks a little different, and there are moments in time where the swing point is on the start of the fair value gap, and at the end of the fair value gap, and at the start of the fair value gap, and there is still a fair value gap going through a swing point. But this one, you can see the swing point is actually inside the two ranges, the 2 points. That's the one I prefer. The other times, there are times where it's not inside. The fair value gap does break a swing point, and it still produces a valid entry. There's many entries and examples where I could show that same idea happening, but I prefer this one. Press it, play forward, and look at the drawdown. Right? Look at the drawdown. Now, a trader would not be able to hold this if they're risking way too much. They're biting way more than they can actually chew. If a trader is risking just the right amount, they're not babysitting this trade. They can actually take the trade and walk away and come back later and see, oh, wow, the trade either worked or it failed. Right? There's no emotion to it. There's no attachment to the trade. Right? There's no emotional attachment. You start to get very emotional when you're risking more than you actually have. There's no point in doing that. You have so many other trading days to trade, so many other months to trade, so many other weeks to trade. And look at that. Our price gets all the way back up. Entry idea again, forming below midnight, below New York Open, and below Sunday's opening price. Look at that. That's just amazing. We'll speed it up a little bit. There you go. If you hear people talking in the background, I got a couple of family members over. It is Labor Day weekend here in America, so got a lot of family, uncles, nieces, cousins here at the house right now. Family is very important. And there you go. Look at that. Price got back up to your buy side. Target hit. TP hit. 15 pips. Done. I'm not looking for too much intraday. I'm not looking for 100 pips in one kill zone. Sometimes that does happen. I'm not looking for, the home run swing. I just want 15 pips and I'm going home. I'm done. Close my computer, get off my phone, go do something else for the day, go check the garden, go check the farm, go hang out with the homies, play some frisbee, whatever it is, do some kickboxing, whatever it is else I got outside of trading, I'm gonna go do that. I'm not gonna sit here and now stare at the chart for the next 5 hours. Oh, what's going on in the market? Took my trade, made my money, went home. And let's say I took my trade, took the loss. Hey, chin up, head up high. Tomorrow's another day. We'll get it back. And that's it. That's the New York model here for Tuesday. That was great. Let's move on to another day. So we can delete this. See you later. And we can move on to another. Go to Wednesday. So Wednesday London model. See if I can time it right. Stop. That was just perfect. So we got right. It's 2 o'clock. There we go. 2 o'clock. Awesome. Now, this one is interesting. You got to pay attention for this one, right? Hopefully you are looking at the screen. You got your pens, your paper, whatever, right? This is buy side here, right? Because it's a swing high. Like we said, we're looking for swing highs, swing lows. But here, some people may ask, well, Deontay, where's the sell side here in this idea? Yeah, this one is not consolidating. Besides the point. Still a dead zone we like to frame here. But where's the sell side here? People may ask. The sell side I like to take is the lowest low then, or the highest high. Sometimes the lowest low is the swing low. Sometimes the highest high is the swing high. But I'm going to be taking this as our sell side liquidity pool here. Got our opening price too. Right here. What is this? This is London. So London opening price, LOP. And then we're going to put this here, here, and here. I think my microphone gain is all the. Let me turn it down a little bit. Because this Blue Yeti mic is really good. It picks up everything, like the TV downstairs, people walking up and down the stairs, the door closing next door, my brother's room. We turn it down. Hopefully you guys can still hear me. Can you guys still hear me? Let me know. I just turned down the gain on my microphone. Appreciate you guys. Thank you. Play it forward. Sell side is taken. Right, price comes down, takes out sell side. That's the raid right there. That, to me, I'm classifying that as the raid. You just raided sell side. Now what do I have left? I have buy side available again here. This is EU, guys. This is London session. I don't trade London session, but I go back to study it just to be like, okay, I can't go out here teaching people this if I don't actually know what's happening, right? I can't go and tell you, oh, this is the London model, and I don't even actually back test it myself or study it myself. Right? That's one thing I will not do. Be very transparent in what I do. I don't do certain things. I don't trade London session, but I know other traders like to trade London session, so I want it to be available for many followers or supporters and traders in the community to find something during their time of day. Because sometimes you're not available during New York session, depending on where you live on this planet, right? Some people live on the other side of the world and they're in a different time zone, so they're available during this kill zone. So let's take a look at that. So go down to the 1 minute. Could be just rated sell side. What are we looking for? That triple confluence idea. Look at it right there too. Ah, lovely. This one happens very early. Happens at 218. Okay, that's the end of the fair value gap there. So 218 takes 3 candles to make the fair value gap. 218. There goes the swing point again. Look at the swing point right there. Nice. I love that. Here, go long. I think somebody in the chat had mentioned they like to go long at that swing point high instead. Sometimes some people would opt out. Instead of going long at the top of that fair value gap, the premium side of that up fair value gap or busy, some people said that they like to go long at that swing point. And you can see price comes down and respects it. And even the bodies of the candle too. Very interesting. Respects it really well. Love it. Right? Very, very, very systematic, right? Methodical. It's not random at all. And we play it forward. Look at that. Quick. Oh man, you got your profit in what, 30 minutes, an hour, 15 pips, made $100. So you got a 10K account. 10K. What's 1% of 10K? It's $100. It's $100. So if you win, you're up $100, you're up 100. If you lose, you're down $100. It's not the end of the world. That's why I tell traders all the time, you gotta risk small depending on your equity. You can't go out here swinging hard. Yes, there are going to be some times you take this model idea. You might tell yourself, you know what, man, forget about Deontay. I'm risking 3%. Yeah, you may win $300. I'm risking 4%. Yeah, you may win $400. I'm risking 5%. Yeah, you may win $500. But sooner or later, it's going to catch up to you. And you're going to have back-to-back losers. And you're going to be in a deficit. And then all of a sudden, what's going to happen? I get this message all the time once in a while. Yo, Deontay, I'm down in my challenge account, or I'm down in my funded account. What can I do to get myself out of this rabbit hole? Honestly, you can't do much. Right now, all you got to do is take small trades and look for bigger rewards now at this point. You're going to be looking for very specific and niche ideas, and you're going to have to be consistent. You can't break that model because you're either going to blow your account, you're going to get your funded account taken away, you're going to fail your challenge account, you're going to, like I said, you're going to blow your funded broker, whatever the case may be. The whole point is not to even get there in the first place. Right? I ask traders all the time, how'd you get there? How are you down 6% of your account? Oh, well, I saw this big opportunity, or I saw this guy tell me to buy and sell this currency pair at this time, or I took somebody's signal, or, I just didn't know what I was thinking. I was so emotional. Hey, that's on you, dog, right? I can't help you at this point. My best advice is, hey, take small risk and slowly get yourself out the rabbit hole. The whole point is you don't want to get in the rabbit hole. Let's say this trade did take a loser today, right? Let's say this trade was a loser. Instead of it going up, it hit stop loss. You lost $100. You cannot risk 1% again. You need to now risk 0.5%. You can only risk 0.5% now at this point. So you're only risking $50. The next trade that you take, you can only risk $50. So a 0.5% of 10K is 50 cash, 50 beans, right? Whatever it is. That would be 50 monyan, right? There we go. 50. We got 50. There we go. Get it right. Get it right, D. There you go. $50. That's all you can do now, tomorrow. And let's say you take another loss. Cut this again. Cut this down to a 2.5. You can't risk more than $20, $25. You can't do that. Risk small. And as you compound, right? Let's say now you get this trade back. You won this trade. It would take 2 winning trades now to get you back. So you need to take 2 winning trades to get you back to 100 cash. Then you could start risking 1% again and start moving forward. Now you start to see, okay, now there's no fear in losing. I don't have much to worry about. I don't have nothing to stress about. That's it. That's it. There has to be some type of strategy to your risk management protocol. It's a lovely trade. Another dead zone. I'm going to play it all the way through. It's nice to study and watch how price progresses on the 1 minute time frame. Ooh, got right. And stop loss. There you go. Right? Pay the trader. Don't get too greedy. Don't get too greedy. People who think it's gonna get back here. Not a guarantee. The market does not guarantee or owe you anything. So you take your small win, cha-ching, you go home. Come back to work the next day. That's how I like to move. Let's go back to the 15-minute time frame. I think that's all for this one for EU. Yeah. That's it. So nice. We got through EU. That was a great. We'll leave this on. We can delete it. Keep it clean. Keep it clean. Delete that. Delete that. And delete that. All right. That's it. That was EU for this week. Which I could have found there. And let's move on to UCAD. So this is the last one for our weekly range review. This is the last week of the month too. Man, it's crazy. Take a look. Take this off the chart. Do I have any water in here? Dang. I don't. We got New York model. New York model have an asterisk here. Right, something specific about that one. And a New York model here. So this one is all New York models. Take a look though. Look at how price is trading around Sunday's opening price. It's threading the needle, threading the line in the sand multiple times, finally breaks away, sells off, finally gets back here during this news event. That was amazing. For those that know, paid group, we watched this. UCAD. This was a nice trade idea. Ran up, hit Sunday's opening price, quick reversal, and then again, right back up. This was a great trade, honestly. It was a magnificent trade. Let's see. What makes the low of the week? Tuesday. Look at that. Tuesday makes the low of the week down here. And the high of the week, again, Sunday. Interesting, right? Interesting observation. Let's take a look at Monday. Right, all the other ideas we were talking about were either a Tuesday, Wednesday, or Thursday, I believe. This one's a Monday. Right, for those that are Monday traders or have time to trade on Monday, you can still find trade ideas. Take a look at that New York model. We're going to go through this one a little quicker because we are getting that repetition. We understand how it works. It's just nice to go over it with somebody or go over it with yourself. Go back and study the material. Even if you don't trade that pair, go back and look to see what happened. Because one day you might be trading that pair, or one day you're going to see that same system or formation forming a pair that you're looking at. So we got this dead zone, we got this dead zone here, and we got, move over, 10. All right. Sell side. Love it. Buy side. Great. We got what? Midnight. Where's midnight opening price? All the way over here. There goes midnight. MOP. Today was such a great day. Great trading day, man. Good day in the garden. Played ultimate frisbee with my boys in the park, man. Today was great. My family just came up for Labor Day weekend, bro. Life is good, man. Thankful. We got the kills on opening price. This is a New York, yeah. Everything's a New York model. Nice. So let's take a look at this. Let's play for it. Zoom in so we could. I want you to take a look. Look at how it makes an equal low with that low. Doesn't run the low, just makes an equal low. Double bottom. Right? Don't chase price. Let it do something first. Let it do something. Your best opportunity to take trades is when it's knocking other people out of trades. Don't let that go over your head. Your best opportunity to take trades, it's when it's stopping other people out of their trades. Play it forward. Play it forward. There we go. Look at that. We run buy side. Run buy side. We're somewhere up here. We're getting into some type of, we're starting to get a double confluence, and we just started to peek into a triple confluence above SOP, midnight, and NLP. Let's go into 1 minute. So ready to buy side. Look at the first fair value gap that forms here. You also have an IVG right here, inverted fair value gap there. I know many people like to say, but Deontay, what about this? What about that order block? What about that? I see it. I do. I appreciate you guys, though. I really do. That's the first fair value gap that forms. There's another one there. Let's keep playing it forward. Keep going. And we can see here, there goes the entry idea. But something's a little different here with this one, right? What's different? Can somebody tell me what's different about this entry idea? I should have put the asterisk here. What's different about this entry idea? This is for someone that is truly paying attention. Uh-oh. Do we still have eyes? Could somebody in the chat let me know that you guys still have eyes? I think the page is kind of like refreshed. Can you guys see the chart? Can you guys hear me? Cool. All right, thank you. Appreciate it. All good. Hey, thank you for being here, my man. All right, the question I'm asking, what is different about this entry idea compared to all the other ones I just showed? Ah, there we go. All right. We're not in the premium, right? Is this a single confluence, double confluence, or triple confluence, this idea here? Is this a single, double, or triple confluence? This idea, this fair value gap, where it's forming this sequence. It's a double. Correct. Thank you guys. Absolutely. Good job. Excellent. Great answer. Why is it a double, right? For those that might not understand, why is it a double confluence? Well, it's a double confluence because we're above New York opening price. Let's go to icons. We're above New York opening price. We're above Sunday's opening price. But we're not above midnight opening price where this entry occurs. Even the first one too, the first fair value gap that forms, there's no fair value gap above the midnight. So we're only in a 2 out of 3 here. 2 out of 3. That's not bad. Right? This is what I was trying to tell earlier. That is not bad. That is not bad. You could still take this idea. Let's play it forward to see what happens. Let's say we put this out. We put our parameters in. We're going short there. 1 to 1. That's it. So you're getting your sell above the kill zone because it's very extended. Look how extended it is. It moved with some purpose there, right? It purposely, think about it, it purposely pulled itself all the way up here, Purposely did it. At one point, it wasn't a triple confluence idea, but it didn't give an entry idea above midnight opening price. It's close to it though, in proximity. It's pretty close. Some people may argue, right? And you may not want to take this one. You may not want to take the 2 out of 3. You might be the trader that said, you know what, Deontay? Now I'd rather opt out for the 3 out of 3. And that's fine as well. Right? You have the flexibility and the freedom and the autonomy to do whatever you want when it comes to trading. You could trade any way you want. You want to trade with indicators, trade with indicators. You want to trade with an RSI, a moving average, Ikomoku cloud, etc. Those are my classic 3 indicators that list because I don't know any other indicators, honestly. Those are my 3. If you notice, I always say RSI, moving average, and Ikomoku cloud because I don't know any other retail. I don't know any other retail indicators with those 3. If you want to trade with any other indicator, do so. It's up to you, right? But we don't do that over here. I'd say this all the time. Indicators are detrimental to the development of new traders. It is absolutely detrimental to traders because it's a lagging indicator. Press play, and TP hit right into the news too at 8:30. Right into 8:30. And what happens? The news shoot it up, shoot it down. What happens? Let's see. Probably get a continuation after the news. News event wasn't very volatile. Didn't really do much, right? Just continues to sell off. Not every news event, even though it's high impact, doesn't mean just because the news event is labeled high impact does not mean the market's going to give you high impact data or price action, right? Or fast, speedy movement in the market. Look at 8:30. Look at that candle. We have candles that are larger. We have candles during this kill zone that are larger than the 8:30 candle. It's funny, right? It's very odd. Very odd. And just very interesting to observe. And this one idea possibly went from a 1-to-1, right? That 15 pips. It goes that right there, a 2-to-1, and basically almost a 3-to-1, right? Or more. It just keeps going. So I like to take the small ideas and see if it can keep running on. Look at that. This is perfect. Little to no drawdown. You're gonna run into that once in a while in your trading career. You're gonna run it, and it feels great. I know people in the community like to have bragging rights and like show off to their trading friends or whatever the case may be. Oh, look, my trade, little to no drawdown. Flex on them. Hey, kudos to you. Pat yourself on the back, right? But we trade with a stop loss because we know our entry may not be the exact turning point where the market's gonna sell. It could continue to go up here and then drop down, just like those other examples we looked at. Price dropped into a deep discount for that. I think it was a London or New York model. It was one of the two. It pulled all the way down, right? And then it went back into TP. But like I said, we weren't worried about the drawdown because we would risk properly. We can handle the loss if we took it. So that's the New York session on a Monday. Way to start a Monday, right? Way to start the week with that model. Awesome. That was great. And there's news too. Right? If you're going to frame your weekly trading schedule, frame it around the news. What pairs or what news is going to be a part of these pairs? So we got dollar news. So UCAD could be on the schedule for you to look at. UCAD, USWISSy, you look at that for Monday during the New York session and see what happens. And it gave you a continuation down. That was amazing. Let's move on to another day. Let's get rid of this. Goodbye and goodbye. Let's play it forward. It's Tuesday also New York session? New York model? No, it's Wednesday. Okay, Wednesday. So the Wednesday is the one that I was telling you about earlier in the chat. If you were listening attentively, I said not every time you're gonna get all the steps. Step 1, it raids buy side or sell side. Step 2, you get the entry in a triple confluence or double confluence idea. And in step 3, the entry forms, right? And you look to take a shot. But oftentimes, not often, let me stop saying that. Once in a while, you're not going to get your entry. It is what it is. You're not always going to get your entry. So I want you to take a look at this. Yep, here. All right. So go here. That's sell side. It runs it out right there at sell side. That's that sell side liquidity pool. It's here. This is buy side. I shouldn't be showing you everything yet, but it happens. Again, I'm going to ask the question to the chat. What often happens inside of these gray zones? What type of phase of the market? We have 4 phases of the market. What phase of the market would you say this is? There's 4 phases in the market. What phase would you call this? It's dead. Yeah, it's dead. That's not a phase. Good answer. There's 4 phases, 4 basic phases of the market. Sean, yo. It's definitely dead. The phase begins with the letter C. A little hint. It's also known as accumulation. What phase of the market is that? Just ask me in the chat. There we go. Consolidation. Great answer. Shout out to the chat. Right? Consolidation. Oftentimes, we're going to see this happen here. I know in this dead zone, there's no consolidation here. But take a look, though. Look at how it runs off. It runs out the highest high here at 2 o'clock. Look at that. It runs out that dead zone high and fades it. Just fades it hard. So let's take a look at this. So if you zoom in closely, let's go midnight. Where's midnight? We got midnight. You're going to see how this idea was a little different. I wanted just to show there's different ways it looks. It's not always picture perfect the way you want it to look or the way I'm probably conveying it to be. It's not always going to be perfect. So you got to be a little flexible in what happens in the market. But don't be too flexible, right? Have some discipline, have some structure, be objective. Midnight opening price. Man said it's dead. That's Man said it's dead. Don't trade there. That market is dead, fam. All right. And what's this? 7 a.m. New York open. Bear with me, guys. We're almost there. Don't worry. I know people's attention spans can be short, but hey, we're trying to lock in, trying to learn, man. This can change someone's life. Honestly, this could be supplemental income. This could be full-time income. Man, this could change someone's life, man. I'm telling you, change mine in a positive way. So price runs down and takes out sell side, but there's a conflict here. Can someone point out what's different again about this idea? Remember, SOP is up here. SOP. What's wrong here? We run sell side, but what's happening? How many confluences do we have here? Is it a double, single, or triple? When we were right down here at one point. I know somebody's going to get it. I believe in you guys. Correct. All right, good. That's a start. We're under SOP. Good job. So that's one. Check. What else were we under? Let me bring it back here. Right, we were under SOP. And right here, let me zoom in because I know I'm blind. I can't see either. And we're also under what? Hint. Right there. Yeah, we're also under New York Open, NYO at that point. But we're above MOP. So there's some conflict here. So we only got a 2 out of 3 confirmation. 2 out of 3. That's all we got here. And again, like I said, this could be something that you still may take. Let's go down here and let's take a look at what's happening here on the 1 minute time frame. Isn't it crazy how we're able to go on the 1 minute time frame and find these ideas? People lose their mind. Retail traders lose their mind not comprehending what's going on here because they have no structure, no context. I'm laying out the foundation and the context behind what we're going to be doing on the 1 minute. It's not that we jumped on the 1 minute and now we're looking to trade. No, we were on the 15-minute time frame with the context and framework. Now on the 1 minute time frame, we're objectively seeking one idea. We're not wishy-washy. We're not on the bandwagon. We know what we're looking for. Play it forward. Hey. Someone said in the chat, shout out to Sean, said, I was scared of the 1 minute time frame until I started watching Forex Fridays. Hey, I'm glad. I'm happy. I'm happy you're able to now dial in your entry now, right? You're able to dial in that specific moment in time where the market is more likely to give you a feasible trade idea. Thank you, man, for telling me that, man. Makes me notice that my work is not being unrecognized and I'm actually helping people. So that's where we would look to go long, right there. Right there. And this technically would not be the long. It's still right there. That next candle opens, I want you to know here. Unless spread, right? I'm being picky here. Unless spread or your broker was able to knock you in here and you're able to catch that long, then you were long. But price never runs back down into this fair value gap at all. It opens on it and runs away. right? Doesn't necessarily come down below the fair value gap by a couple pips and then run up higher. So here, possibly could have been a miss entry, because look at what happens after. Look at that. Leaves us in the dust. It does exactly what we expected it to do, right? Our visualization, we visualize that, okay, if it took out sell side, we know it's going to probably run back up here. And it did it though, but we missed the boat here. Now, you can do whatever you want with this information. If you want to still get in the trade idea and you couldn't get that entry, you want to look for another entry idea, you can. Because right after that too, you see the next fair value gap is respected and traded into fully and properly. And it's the same idea too. Look at it stacked on top of each other. Swing high, ran through with speed. Swing high, 1, 2, 3. This is still a swing high, folks. Do not be confused. Just because it looks a little larger and like lanky looking, it is still a swing high. The candle in the middle here has a friend or amigo on the left and right that's lower. This candle's high is lower on the left. This candle high on the right is lower. So this candle in between those two friends or those two bars, that's your swing high. That's your swing point. Press it forward. There goes the fair value gap through it. Now, I'm not saying it's always going to be like this. Every day, what we observe looks just a little different. But that's why we take notes. That's why we journal things. That's why we take screenshots. That's why we print charts out. That's why we print things out and look at it and just try to see if we can replicate that in another pair. This is why we do these things. And price trades all the way up. Look at how it respects New York opening price. Ah, man. You just know this market is so rigged. Look at how perfectly it comes down, taps New York opening price. After crossing it, taps it, even runs into the fair value gap, taps it, runs away. Man, market is so rigged. And price shoots all the way up. Do not disturb. Shorty, can't text you right now. Okay, cool. All right, next day. Shorty's trying to throw me off my mojo. Got to focus up, fellas. The shorties will always be there. That's what my dad said. The shorties will always be there. Get your money first. All right, let's play it forward. Wow. Sheesh. That New York model idea still would be in profit. It never came down to hit that stop loss down here. That stop loss is still intact. If you were still holding. And then Friday, New York model. Now this is one I got into. I wasn't able to do the live session with the paid group because I had to go pick up my mom at the train. But when I was on the road, I was trading. I don't recommend anybody driving and trading. Please don't do what I did. But let me go. Dead zone. Play it all the way through. There you go, 7 o'clock here. And we're going to frame, and we had news too. So pay attention to the news. I want you to pay attention to the news is the excuse to move price action fast. All these clean lows, right? That's sell side. Take it as it is. Sell side. Again, look at the phase of the market that's happening here. Consolidation. You're accumulating orders. Opening price here. Remember that last idea that we talked about was a 2 out of 3 discount opportunity for the long. And this is what? NYO. Perfect. Now we're looking for midnight. Midnight's all the way up here. So we're cheap. We're very cheap. We're all the way below midnight opening price. True day open. We're cheap. And we're also below. Let's get that other one. Come over here, buddy. We're also below Sunday's opening price. Let's play it forward and see what happens. Play it forward. See how it look like. Look how the market just starts to gauge, right? Starts to pick up, and it looks like it's about to take off. I already know Traders with no discipline are probably chasing this. They're like, oh, wow, it's about to start pushing, break retest. And then all of a sudden, the market humbles you just, instantly. And people, what are the retail traders going to say? I see this all the time on Reddit, on the Trading View forums and stuff like that. They'll come in and be like, they'll take a screenshot and send it on Reddit or send it on Trading View or whatever, and the title will say, "What just happened?" The market just dusted you. That's what happened. You have no idea what's happening. You're not framing your idea. You're just trading off of just pure emotion and just the market going up with a candle green. And you're assuming, oh, retail logic, oh, it's going up, bullish momentum, the market is getting stronger. The indicator is telling me it's going to keep going up. There's a buy signal. No, the market humbles you really quickly. Price action is your friend. There's also a sell side here. Here we go. All right, cool. We have a triple confluence idea. 3 out of 3 checking off the boxes here. Watch this. Oh man, today was a great trade. Great trade. Entry idea forms here. The news event. We had 2 news. I think we had 2 or 4. We had a bunch of news events. We had a bunch US data and CAD data. GDP growth. This is important. When they start talking about GDP, best and believe you're going to see some volatility coming into the market. And what was the US news? I didn't even know what the news. I really don't care what the news is, to be honest. I don't care. I say this all the time. I'm not saying it to be nonchalant or anything like that. I just truly don't care about the price, the news event and what it is. The only ones I would really concern myself is the interest rate decision, because I want to know if the banks are increasing, cutting, or remaining the same, so I can gauge, okay, in the future, maybe this currency pair is going to gain value or lose value. That's it. That's the only data I'm really paying attention to. Okay, right here, now we're long. Boom, price taps it. Right, the fair value gap forms just perfectly below New York opening price, so it's in a discount. Majority of this fair value gap is definitely in a discount, so we're going long there, which is perfect. And this one, I was like, dang, we're gonna take a loser today, because I was like, dang, I wanted to do the live Zoom with the paid group, and I was like, dang, would have been nice to watch this and stuff like that, because it started shooting up fast. I was like, hey, you about to get in profit, scale out 10 pips, and I was like so ecstatic, and then all of a sudden we saw this. Watch this. Price is going up. I was like, hey, and then all of a sudden it did this, and I was like, whoa, wait a minute. I was like, today's gonna be a loser. And I said, you know what? Let's just hold it. Let's see. Let's see what happens. The news event comes out, 8:30. Look at how the candle pulls everybody down. I guarantee you, traders were sitting here waiting, because there's traders that have a model like this, right? Their system of trading frames around Russian roulette. I would better say, around the news events, looking to see, the data is going to come out. Oh, let me buy and sell based on the data. You're going to get yourself smoked by doing that. The market pulls everybody down on the data, and you could take an educated guess that retail traders are trying to chase the news down. So they're going short, 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 short. But where are they going short? They're going short in a discount for the kill zone, for the day, and for the week. That's not ideal, right? That's not good business. That's not good for business. Going short in a discount is not good for business. There are case scenarios where going short in a discount does work, but that's not something I'm looking for all the time. Let's play it all the way through. And man, runs right back up to New York opening price, runs back up to midnight opening price. Look how it stops there perfectly too. Ooh, look at how it stops right at midnight opening price perfectly. Bodies are respecting it too. And fades it, runs right through it. Cuts through that thing like butter, man. And then look at how it hits Sunday's opening price perfectly. Bang, hits it, sells off one more time. London close, kill zone. Put on the chart real quick. There you go. London close, little small reversal, and it continues. Goes right back into that direction again one more time. Dead zone. Hits Sunday's opening price again. Played all the way through, just so you can see where it's at now. And that's, I wonder why the line is there. What the heck? And that is UCAD Friday. Thank God it's Friday. TGI. Trade idea. That's that. That was a great idea. So hopefully you found this insightful. That's what I do on a day in, day out, weekly consistent bias. Every day I'm looking for these ideas. Not every day is a trading day. Not every pair that you're looking at is going to give this idea, but I know out of a handful of pairs, if you shuffle around during the day, you shuffle around UCAD, you shuffle around, I wouldn't say you Swissy really, you shuffle around UCAD, GU, EU, AU. I would leave NU alone. Is my laptop dying? Make sure this doesn't die on me. Sorry, dear. You good, my man? Yo, family first. Respect, man. Take care of your son. Hope you and your son enjoy basketball practice, my G. Thank you for your time. You'll be able to see the recording later. I'm glad you were able to see this live though. Take care, man. But yeah, that's the weekly range review, right? See that methodology that we're talking about here? Sunday's opening price, midnight opening price, and the kill zone's opening price. We went through DXY, EU, and UCAD. I could have picked any other pair to show you these ideas as well, but we like to switch it up week by week, and I like to take the pairs that I'm focused on for the month. So that's why I picked EU, and that's why I picked UCAD because I took a trade on UCAD today. Now, next topic, we're going to get into bullish and bearish months characteristics. We're going to be looking at EU first, and then we're going to be looking at DXY. So let's take a look at EU. Pull up another chart. We use the IPTA chart actually. No, we could use this. We could actually use this. Let's go to EU. Where you at? EU. We can remove the news events. Get that off. Take off the session indicators now. Great. We're going to go on the daily chart. We're going to mark off the start of August and the end of August. And just take a look at the progression of how this monthly chart formed. I'm sorry, this daily chart formed for the monthly. This month was an uptrending month. We all can observe that, right? With our two eyes. Nobody here can debate and say that this is a market that was stagnant or lethargic and moving sideways. No, this market was dynamic this month for August. And you'll see why we picked this pair for the month and how we were able to even get a pair that was super dynamic, right? Very dynamic. We'll get into that the next topic, right? Before I get ahead of myself. Let's mark off a few things in this chart. I'm going to ask you guys a handful of questions here, right? Just to pick your brain so you guys can understand here, right? And engage. When it comes to a bullish month, what are some things you would expect? So I know you guys already know what happened, but what are some things you would expect from the market? Just shout out any ideas. If you know and you envision that the monthly candle is going to go up, what would you like to see on the daily and the weekly chart? What are some things that you might see? Doesn't matter if it's a right or wrong answer. I'm here to help you guys. We're all here to try to sit at the same table. Not all at once. Right, same methodology. This methodology is such a same fractal idea. Very fractal idea. Don't be shy. Anybody can answer the question. There we go. Love it. That was the number one answer I was looking for. Great. Excellent job. We're looking for you can imagine if this month, if you come in here with a preconceived notion that price is going to be a bullish month, that August is going to finish up, we can take the educated guess that we're going to get higher highs and higher lows. I love that. So just write this: higher highs and higher lows. And this could be via swing points too, right? Swing highs and swing lows. That's a great answer. Number one, right? Is there anything else? I'll take another answer, and after that, I'm gonna give you guys the answer key. I will give you guys the answer key. Ooh. All right. Give you guys some time. 5. What was the question? You're good. The question is, if you're expecting August to be a bullish month for EU, what are some things or characteristics that should form for this month? We have one answer already. It was higher highs and higher lows. Very nice answer. I love that answer. Very simple and straight to the point. What is something else, a characteristic that you can see? Good answer. Shout out to Sean. Bro, great answer. Price being in a discount. Let's write that down. At some point, right? At some point, price will be in a discount, meaning below the monthly opening price. Great answer. Now, the rest of them, right? What are you going to see in a bullish month? You're going to see busies or fair value gaps, right? Or speed to the upside. You're going to see that, and price is going to respect it and move higher. Great. Another thing you're going to see, number 4, right? Price trading away from down days. Let me think. Is there any other that comes to mind? Let me think. We got the higher highs, higher lows. Price will be in a discount. Great answer. We got a busy or fair value gap or speed to the upside. Got price trading away from down days, which is also, I like to call this, counter trend. Because if we're suspecting higher price action or bullish trend, down days are counter trend days. Counter trend, I like to call it. And that's pretty much good there. We don't got to go to number 5 and over exaggerate and stress ourselves out. So let's take a look and see if there's any of those signs as we go forward. So number 2, actually, we have it already. Price is in a discount at some point. There it is. It's below in a discount. Great. That's nice. So we can check that off the box. Now it's not guaranteed, but it's a sign. So let's play it forward. Whoa. Large candle to the upside after a down close candle. Look at that. Price trading away from down days. Is that not what we see here? It's a down day, and it's also a small range cycle. Price is small here, relatively small still, and then boom, large candle. We haven't had a large candle like that in weeks and days. So it was due. That was very overdue. So the market is going to flip that switch back into a large range cycle. For those that know about Larry Williams' long-term secrets to short-term trading, in his book, he talked about a natural range change cycle. And the market's natural range change cycle is small, large. That's it. It's very black and white. After small cycles, you're going to more than likely get a large cycle. After large cycles, you're more than likely going to get small cycles. It's not picture perfect. It's not that after this large candle, you're guaranteed to get a small candle. You may get another large candle. Don't be surprised if that does happen. I'm not telling you it's always picture perfect. Let's play it forward. Oh, look at that. We got a busy. What is that? We got a buy side imbalance, sell side inefficiency. The market was inefficient in the sell side because it's one-sidedness. So all to the upside. There's that gap from this candle's low to this candle's high. It's all one-sidedness. These candles are not touching shoulders, as you can see. That's how I like to say it. Right? These candles here, from here to here, these candles don't hug at all. And there's also a volume imbalance here too to the upside. There's a gap. Price closes here, and the next candle opens up with a gap. And what do traders do here? They like to chase. That's just a little side note. We could talk about that another time, but there's a gap here. There's a busy. So let's mark that off. We'll just keep it fair value gap. Keep it simple. There we go. Let's play it forward. So far, what we got? We got a swing low. Make it blue. We'll just say just swing low for now, right? Because we don't know if it's a higher or lower one. Technically, it is a lower one compared to this one. So let's just say it's a lower swing low. Lower swing low. Great. Let's keep playing it forward. See what happens. Oh, we got a down day. Great. Let's see if price trades away from it. It doesn't. We got another down day. Let's see if price trades away from it now again. It doesn't. We get another down day. Now we're tapping into that fair value gap now. Let's play it forward. Another down day. But in this down day, we have the completion of another swing point after breaking a swing high. That was another thing on that I should have put down for number 5. In a bullish month, you'll see price break swing highs. It's inevitable if price is making higher highs and higher lows. So we got a higher swing low. So number 5, let's add that there. Price will break swing highs rather than swing lows. There are times it can break a swing low, but if it's going to trend up, we know guarantee it's looking to run buy side above the swing high. Swing high here, swing high here. There was a swing high right there. We'll mark off every swing high as we go along. There's a swing high here. There's a swing high here. There's a swing high over here. Right? We don't get the chart too crazy, but swing high here. There's a swing high here. And for those that remember this day, we talked about this in the daily updates, right? If you go back to the daily update for August 8th, for Thursday, we talked about how the next couple candles were inside this range. And we spoke about whether or not which side it's going to break. If it broke to the upside, that's most likely going to be the trend. If it broke to the downside, that's most likely going to be the trend. That's what we talked about. Just keep playing it forward. Keep playing it forward. And it broke to the upside. Look at that. Now we're trading away from down candles. Look at that. All these candles, these candles are trading away from it. It's like, yo, we can't be homies no more. We can't be friends no more. I'm gonna leave you alone, right? I'm gonna leave you in the past. I'm moving on. I'm leveling up. And that's what happened. Price left these candles in the dust here after down candles. That's another one, right? Price is gonna trade away from down candles. Awesome. Now we also have a higher swing low. Price is breaking a swing high. Odds are it's gonna run. It's gonna run for that high. What happens? It runs the high. Another busy. Look at this. Busy. Right? Another fair value gap. These are all the characteristics. Look at the signs. I'm just trying to show you the structure to how this monthly chart finished forming and how it did it day by day. This is why we do the daily updates. But this is for those that weren't able to watch it. I tried to make it short, right? They're 2 minute long, they're 3 minute long. Unless I really have a lot to talk about, sometimes it's like 5 minutes to 10 minutes for a daily update. But it's very informational and it gets straight to the point. I don't waste any time in those daily updates. Another down day. Let's see if we trade away from it after running into what? A fair value gap. What you know? We're running away from a down candle again. And we're also doing what? We're creating another higher swing low, which makes this the lower swing low now compared to the new one that's holding the crown. Is a higher swing low. We have another swing high up here. You see how it's very simple, but you got to wait. It takes time. You can't just go into this market every day and ask for too much. The moment in time will present itself. You just got to be able to understand what's happening. Again, price trades up. There's a small fair value gap here. Very tiny. We'll mark it off anyways. All right? Cool. Nice. Play it forward again. Another. And there's a very large one too. Another fair value gap. Great. And you guys saw how I went long after this down day because I took the educated guess. If price is going to be bullish, it should want to trade away after down days. So Friday, I went long. After this down day finished closing and that new candle opened, I went long. And I put my stop loss below the most recent swing low that we had because it's going to be protected. Price is going to want to break swing highs, not swing lows. I am not saying that it will never break swing lows in a bullish trend or a bullish month because they're all false breaks. Price could have easily took out this low again and then went back higher. What can I do? I got to live with that. Can't control the market. Is it frozen? Let's give it some time. Thank you guys for still being here. I appreciate you guys. I think you guys have eyes. You guys should be able to see the chart now. Another fair value gap there. Another one here. Not every single one is going to be filled in. Another down candle. Look at that. Down candle. See you later. Down candle. Some type of up move though, right? Still an up move. And then that's when we saw, I started to tell you guys, be careful. The monthly candle might be making the high of the month. We have a smash candle sell signal. We're not going to get too far into that. We'll talk about that another time. But we saw a sell signal on the daily chart. And so far right now, if you would have took that sell signal that we were talking about, you'd be in profit. Now, I don't know if it's going to roll over into next month. We will see. Who knows? But that is your simple breakdown of what a bullish month is comprised of. So now with this in mind, right, with all these ideas and characteristics in mind, you should not be confused. And if you are, it's okay. But I hope you have further comprehension, understanding how these markets actually form. People don't really know how price action is structured and how it's actually birthed, right? How did this monthly chart, let's take this off. How did this monthly candle become like this? We just did it from a day-to-day perspective. A day-to-day perspective. It probably looks very similar on the weekly chart. It's not going to be picture perfect, but I guarantee you the same conditions that we talked about probably are shown on the weekly chart. Look at that. After a down week, look how dynamic price is. The next week, straight up. The next week, straight up. Let's see. This is July. So this is the first down week. The first week was down. The following week, straight up. Next week, up. And the last week, down. Ooh, we got a weekly smash candle here. Ooh, pay attention. That's crazy. Wow. That might be crazy for a sell. All right, let's go to the DXY. So everything we just talked about, take that and just flip it in reverse. Everything we just talked about, just take the same idea and flip it to the other side. Let's look at August for the DXY. So these are inversely correlated. What the heck? I want it. Okay. Oh, I see what I was doing. Okay. Let's get rid of all the drawings here. There we go. August 1st, August 30th. Here we go. It's a down month. So everything we talked about, let's flip it around. So someone said higher highs and higher lows. So what should we suspect for a bearish month? Can anybody in the chat answer that question? If the bullish month is giving us higher highs and higher lows, what should the bearish month be giving us? Jeez, can't spell. Opening price. Not all at once. What characteristics should we be getting? If the bullish month gives us higher highs and higher lows, what should the bearish month be giving us? Premium. Inverse scenario. Sibi, good job, Sibi. Yes, absolutely. What was the first one that we had on the other chart for EU? We had what? What did we write? I just want somebody to say it. The first one said higher highs and higher lows. So that means we're expecting what for DXY? There we go. Thank you. Awesome, Sean. Appreciate it. My man. Correct. Lower highs, lower lows, tomato, tomato, same thing. Right. Good job. Awesome. You also said civvies, right? We should be seeing civvies, fair value gaps to the downside, right? Or speed. Right. Price moving up, price at some point moving above and selling, right? Price moving above premium for ideal sells, right? Number 4, we talked about price moving away from down candles in a bullish scenario. So that means price is moving away from up closed candles. Let's call that counter trend candles. Perfect. Number 5, what else was it? There, yes. Swing high taken. Okay, close. Flip it. Flip it. What's the opposite to swing highs being taken? Because it's a bearish idea. Swing what? Swing. Wait for it. I know you're probably typing. Uh, yes, there you go. Swing lows being taken. Swing lows taken, right? Instead of swing highs. That's what we're going to see. So these are a few characteristics. There's a few others that we can get into, but these are the general premise of what we should be consider or should be seeing in a bearish month, if that's what we're expecting. All right. Let's play it forward. So at some point, it was above in a premium. Great. There is some type of swing high here. We'll just count that there because it's the most recent one we have. Let's play it forward. All right, play it forward. There's an up close candle, right? The first day of August, it was up. It was above a premium. And look how the next day was very large. It looks very inverse to Eve. Look at that. Wow. Just completely opposite. Straight to the downside. Price does what? Swing low is taken right there. Look at that swing low. Price raises a swing low. Awesome. Price creates a fair value gap to the downside, a SIBI to the downside. That's great too. More signs that the market is bearish, showing a very strong stance. I want to continue. And look at this. Does this not look like the same 1 minute entry technique that we talk about? Speed through a swing low, very fractal. Let's keep playing it forward. We finally get an up close candle. I wonder what's going to happen after this up close candle. Oh, another up close candle. Wonder what's going to happen after that. Oh, another one. And look, now we start finally to get this. We finally start to see some selling because we're to be forming a swing high, possibly. Right, this swing high is lower than the other one. Lower swing high. We also have a lower swing low. And make that blue. And this one's, there's other ones that are higher, but let's just write this as the higher one. Higher swing low. Again, thank you guys for being here and engaging. I really do appreciate it. Price sells off again. I think there's a swing low here. Yeah, there's a small swing low here. A little higher, right? This swing low happened to be a little higher. It's okay. Price runs another swing low. Price is trading. Now look, price is now starting to kick into that large cycle again. Right? Because they're still technically looking at this. Market is kind of moving sideways. Hasn't really, it's been in these price points already. All the wicks, you see this? Price was here at one point. The next candle gets there. Price was already here yesterday. And it runs up here. Price was already here the next day. It runs up here. And now finally it's going to start to get to where it's not. Right? The algorithm there always knows where it is and where it isn't. And it know it has not been down here yet. It's probably trying to get there. Oh, bottom left. Yep. Play it forward. Another SIBI to the downside. Speed through a swing low again. I'm going to double check if that's a swing low. Or it looks like a double bottom, honestly. It's a double bottom. Never mind. See? Tricks me. It's a double bottom. Price runs through that. Look at that. Price trades into it again. We can take an educated guess. If you haven't noticed or realized, the next swing point tends to form in the inefficiency. The next swing point tends to form in the inefficiencies. That's on all time frames. Up close candle, price trades away. Wow. And now it starts to really sell. There was another swing low here. Price runs it. This one was higher. This could have been signs right here, right? This could have been signs of buying because it looks like it's failing to break this low, mitigation. But instead, you see price breakdown. Again. Whoops. Again, same thing. I've been doing the same kind of process for the last 2-3 years. the same way I'm explaining it to you and trying to go through the process, this is how I look at the market. Because I just thought that it made sense. It's just like the most simplest way to look at it. I personally, not trying to attack anybody, but personally, the education, the free education, at least on YouTube, it's tough to find someone to like explain certain things in a way that you understand. Don't tell me it froze. There we go. And there it is. You had up close, sold, up close, sold. And then finally, like I said that if euro was going to make the high of the month or start to make a turning point, that means dollar was going to do the same thing. Dollar made the low of the month around Tuesday or Monday. It looks like Tuesday and Wednesday are double. I don't know. Tuesday's lower, and price pulls back up. Now we'll see if this is going to continue into September. If it does, I want to see this, then up. I want to see it run some type of low and then go higher. And that is our bullish versus bearish monthly characteristics. So hopefully you have a better understanding on how trending markets look and what actually makes these trending markets, what actual structures, what actual fingerprints, footprints, whatever you want to call it, right? Allows you to understand further what price is doing. These are all signals, natural price action signals. We didn't use a single indicator to predict whether or not EU was going to be long this month or DXY was going to be bearish this month. We didn't use a single indicator. We used raw price action. We didn't use no COT data either. It's been a very long time since I even talked about COT data. I don't use it. I just don't think it's something I need to incorporate in my trading model. Because it's already, the data is already 1 week late. You're getting last week's data while the current week is trading. It doesn't necessarily help me, I think, in my opinion. Others may debate me and beg for differ, but that's neither here or there. All right, guys. You guys made it to the last subject or topic for Forex Fridays. And this is the pair filtering process. So now you're going to see what pair I'm most likely going to be trading for next month. I already went over this with the paid group. They know what pair we're trading, but I'm going to go over it here with you guys here as well. So the pair filtering process. Right, we don't need this anymore. We can delete all this. Go back to EU. We can delete all that. We can even go back to the IPTA chart, honestly, but we'll do it on this first. First things first, right? It's a simple process. Right? I did it with the paid group in like 2 minutes because I've been doing this for a long time, so I know what I'm looking for. As you get older, as a human being, as a man, you know what you like. You know what ladies you like. You know what homeboys you like to chill with. You know people you don't like to hang around with. You know what in-laws you like, etc. You know what kind of drink you like, what kind of dinners, restaurants, etc. That's what comes with age, right? You get wiser as you get older. And as I'm getting older and progressing in my trading career, I know what I like and I know what I don't like. And it's very simple, cut and clear, cookie cutter approach. First step in filtering the pairs. I need to see the current month that is just ending as we're going into the next month. So it's August. We're going into September. I want to see the range cycle the monthly chart is in. So I'm kind of pulling something from Larry Williams, right? Something out of his book. It really does help me a lot. I appreciate that book a lot. Shout out to Larry Williams. I'm looking to see if the current month that's ending is in a small range cycle or a large range cycle. Now, looking at EU, just taking a look at it, compared to the last 3 to 5 months, this is still a large range cycle in my opinion. This monthly candle is pretty large. Let's take a look at some other pairs too. All right. DXY looks like a large range cycle. Use Swissy, same thing. All right, let's keep going. US oil, very large. I haven't traded US oil in a while. I tend to trade US oil at the beginning of the year in January and at the end of the year, December. So if you were watching the daily updates at the beginning of the year of 2024, if you look at January, if you go on my channel, there's a playlist that says 2024 daily tracking, right? I'm tracking everything I do. It's like a whole library, a catalog, right? So people can't say, "Oh, this guy's he just started trading." No, we've been doing this for a long time. The process has always been the same. I trade U.S. oil in January and December. I don't trade it any other time. I think those are the best times to trade U.S. oil. That's my personal take. ACAD, not looking at that. UCAD, small cycle. I like that. Not bad. You see how small this is compared to the last 3 to 5 months? This is still a small range cycle. You count back 1, 2, 3, 4, 5. Compare this candle to the last 3 to 5 months. It's small. So that checks the box off. I want it to be small. Why would I now? This is a question for those that understand, right? Why would I want this current month to be small? Can anybody take a guess why I want this? Why would I want the new pair that I'm trading or potentially going to select? Why would I want the current month that's ending to be small? Take your time. Right? Why would I want this candle to be small? Yes, exactly. Small versus large range. Very simple, right? I'm expecting and anticipating that we're going to leave a small range cycle and go into a large range cycle for September. That's why I selected euro versus US dollar last month. That's the main reason. Right? This candle here, looking back the last 3 to 5 months, right? 1, 2, 3, 4, 5. Compared to this is the largest candle we had in the last 3 to 5 months. This one right here. It was August. Yeah, sorry, July. July was small. There we go. July was very small compared to the last 3 to 5 months. July is tiny. Not tiny, tiny like these, but it's still small compared to these. So I considered that. This could be a little subjective, right? There's something be a little flexible with. I consider this a small range cycle for the monthly chart. So I said to myself, okay, that means next month is going to be large. And look at what we see today. It's not rocket scientists, right? It's not rocket scientists. It's not rocket science, right? I don't have to be a rocket scientist to see these things. You just got to be educated on it, right? I was once ignorant to all these ideas, but now I'm becoming more educated, right? Because I expand my education by buying books and reading these and taking courses and etc. This large now it kicked into a large range cycle. I would assume that this next month would turn small and probably give a retracement, some type of retracement. Or it could be completely wrong. It could print another large candle. But because of the cycle, I like to keep it very black and white. That's why we picked EU. That's one of the reasons why we picked EU for August. That's why we picked EU. Out of all the other majors, Deontay picked EU. That's one reason why. Now let's continue. Let's see. What else? UCAD. Yeah, I would leave that alone. Look how large the monthly candle is. Right? Next month might be small, lethargic. And it's an outside, this looks like a buy signal, honestly. Outside down bar candle. Might want to buy the next candle to the upside. We'll see how that plays out. UCAD might be in some luck. GU, leave it alone. AU, I will leave it alone too. It's also outside bar candle, outside this range, and it's closing up. Might be a sell signal on the monthly chart. Very quick things that I know and seen over the years. Same thing here, outside bar candle, and it closes outside these highs. Could be a sell signal as well, smash signal. And here we go. The yen crosses have been very quiet this month. And we're talking about the body, right? The body of the candle, not the wick. Forget about the wick. Imagine if we were looking at the chart like this. A tiny month, right? This checks the box off. Check, cha-ching. I like that because that means next month might be large like this again. I want to see another dynamic movement. And this is a bullish order block too. Ooh-wee. Okay. Delete this. UJ, yeah, small range cycle. Keep going. AJ, small range cycle. Love that. Let's keep going. Let's put on the wick now because it looks funny. Small range cycle compared to this candle, it's tiny. Drawings. EJ, small range cycle too. GJ, small range cycle. You're ahead of me. You're ahead of me, Sean. You're ahead of me. Chill, chill. You got it. You got it. That is the answer. That's the pair. All right, GJ, right? Small range cycle as well, right? Down close candle. Look at that bullish order block it traded down into, right? This is outside of the pair filtering process. Just trying to show you little things, hint things on here, right? Everything's fractal. That's a bullish monthly order block right there. Down close candle. Look how price runs all the way from it. They intervene. The Bank of Japan increases their rates. It drops down. Let's see what the Bank of Japan is going to do in the near future. We'll see. But right now, from a price action standpoint, this is a bullish order block. Now, the next step in my filtering process, right, between the small and large range, before we get completely sidetracked, the next step is the interest rate differential. I'm looking for the difference between the currency pairs or the currencies. So come down here and I'm looking to see. So far, the yen crosses are pretty much what I'm looking at. All the yen crosses. I'm not looking at any of the majors per se right now. The yen crosses is something I want to get back into because I think it's going to be really volatile next month because simply they're small. And I think next month it might be large. I could be wrong, though. I want you guys to understand that I can be wrong, right? Next month can be small again and accumulate and consolidate. We've seen that in the past in a couple months before. Like last year, I think we traded EU or AU. I forgot what month. It was like March or something. And the entire month was consolidation. I was having trouble finding a swing trade, right? I did it live. I wasn't afraid to show and tell you guys, hey, look, sometimes the market conditions aren't favorable. All you can do is either go into intraday scalping and look at another pair that is second best to that and moving more dynamic than that. That's what I would say. But since I picked it for the month, I continue to show you guys the progression, regardless or not of the market consolidating. But back to the point. We're looking for an interest rate differential between the two banks. And what you should be seeing right now is global-rates.com. They tend to do a good job keeping up to date with the rates. And we can see that the Feds have a 5.5. What's this? Reserve Bank of Australia, RBA, 4.35. Forget about Brazil, the UK, the BOE, Bank of England, right? 5%. The BOC, Bank of Canada, Chile, forget about that. China, forget about that. Czech Republic, Denmark, Europe, the ECB, European Central Bank at 4.25. Israel, India, forget about that. Japan, 0.25. They currently raise rates. Mexico, forget. New Zealand, right? The Reserve National Bank, I think the acronym is RNZ something, whatever. 5.25. What else are we looking here that's important? Swiss, right? Swiss Bank, 1.25. So when it comes to the yen crosses, anything compared to the yen, there's a huge interest rate differential, pretty much. And I'm going to look for the one that has the largest interest rate differential, and that's going to be the Bank of England versus the Bank of Japan, because they have a 5% interest rate versus their Bank of Japan 0.25. So there's a huge difference between the two, but pretty much 5% difference, right? Europe is 4 and change. Where's the other one? This is also 4 and change. So the Bank of Japan has the larger interest rate differential between them. You could also say UJ, but UJ, we're gonna change it. I think I did UJ already for this month, if I'm not for this year, if I'm not mistaken. So I'm trying to use different pairs so people are not like, oh, we did that already. It's boring. You did this pair already. I know. Sometimes it's the only pair that's more favorable and is outside of my control. So this checks off the box. There's a huge interest rate differential between the two banks. So the whole idea with the interest rate differential is if the rate is higher, more likely investors are going to go towards that bank. I like to use this analogy all the time. If you had two savings account, right? You had, the BOE as a savings account and you had the Bank of Japan as a savings account. And this is the interest on your money if you were to bank with them. Who would you rather bank with? Would you rather bank with the Bank of England or the Bank of Japan? Depending on the interest rate they will give you, the incentive on the money if you were to bank with them. If you were to put money into the savings account, you'll get 5% of your money. Which bank would you bank with? I'm asking the chat. This is not a rhetorical question. If you're an investor, who are you going with? Are you going with the bank that's going to give you 5%, or are you going to go with the bank that's going to give you 0.25 on your money? Go exactly. It's night and day. You're going with the 5%. See, now we start getting into macro fundamentals, and we start to understand how fiat currency actually works here. And what's the primary interest rates are the primary driver, right? There's other things that correlate into what makes FX go up and down, right? Import, exports, tariffs, taxes, etc. Um, GDP, what else? Housing market. There's a few other fundamentals that go into it, right? Macros that go into it. But one of the few that's at the top three, at least top five, is interest rates, the banks. That's why I like to say the central banks are the commercial speculators. Now, I may not know if they are the commercial speculators, but in my belief system, I hold them to a higher standard above us as retail. Me and you, we ain't nothing. We're ants to everybody else in the market. Our little buying and selling is not moving the market. But when the central bank and the central bank traders step in to trade, the market moves. Now there might be other players, right? Private investors, probably very large banks that are pretty up there with the central banks. They might be a part of the commercial speculators as well. But the reason I put the central banks on a pedestal is because they're the ones that decide the rate for the country. They honestly decide the quality of the economy. It's this bank controls the healthiness of the people, the citizens, the jobs, etc., unemployment, employment, the housing market, etc. They control a lot. So when you start to understand that, you start to really see, okay, this ain't just pips and ticks going up and down and candles just going up and down. There's some type of method to the madness. So that's why I say interest rate differentials are important and why it's a part of my filtering process. Because I'm looking for what am I looking for? I'm looking for a strong currency versus a weak currency. That's all I'm looking to do every single month. What currency is strong and what currency is weak? And when you put it together, what currency pair does that make? It makes all the yen crosses, pretty much. And that's been the stance for the last since 2016, pretty much, for a long time. And why I say 2016, that's because 2016 was, where is it at? Is it 2001 or 2016? There it is. 2016 is when they went negative. No free advertisement on my thing, not on my watch. 2016 is when they went negative, and that's when they kind of shot themselves in the foot. And if you look at the yen futures and you look at all the yen crosses since 2016, the yen futures declined significantly, and all the yen crosses turned into a mega trade. They made over $20 trillion in this carry trade. Best believe people were buying any other currency in the world against the yen. They're selling the yen and buying anything against it. Even yen citizens, people that lived in Japan or in the region trading yen, they didn't want yen because it's depreciating in value. Nobody wants this. Nobody wants to bank here. That's why tourist attractions were really high in Japan and still is to this day. I got to travel there very soon. Probably travel there next summer. But yeah, that's interest rate differential. And the second way I like to filter out certain pairs. Now the last step, right? It doesn't matter how you do it. Step one, step two, step three, whatever, is the seasonal tendencies. So I like to use this as my resource, right? The website is charts.equityclock.com. Hopefully you can see the screen. Before they kind of changed the interface of this website. So you come down here, you have to click Forex. Now, people see this, they're immediately afraid, like, oh, you got to log in. They do allow you to access the charts for free, but for a limit of time. I think, I don't know, it's like 6 charts you get to see up to free. But in order to re-access it, you just got to clear your browser cookies and it resets it, I believe. and we'll look at any 6 more charts again. You just keep resetting it. That's just a loophole. Don't tell them I told you that, but it's just a loophole. But they'll make you subscribe now. I personally would tell you not to subscribe. Just leave it alone. Let me see. I don't even know how much it costs. This is not a sponsorship. Like $25 a month or $250 for the year. I don't think it's not worth your while. They already give it to you for free. You just need it for a quick second, right? Click Forex, right? And we're going to go down. Since we are leaning towards the yen crosses, what I like to do is look at 3 seasonal tendencies, right? 3 seasonal charts. I like to look at the DXY. I like to look at the base currency, and I like to look at the quoted currency. So normally we're just looking at the base versus the quoted, because like if we're looking at EU or one of the majors, we don't have to look at another third currency. But since the dollar is inverse to the yen, I'm concerned about that. So I want to look at that. So let's take a look at the dollar index first. Do a click search. Come here, and we'll look at September. So September is leaning more towards bullish, right? It's not neutral. It's not sideways. It's not back and forth like June was more sideways. You can see here. September, I'm not sure. This is not drawn to measure either, right? The metric of this, it's not drawn to zoom in so you guys can see that nice. I'm not saying like, oh, on the 15th or the 20th or the 30th, it's going to do this and show you the same peak and rally. No. There's going to be some type of run up, run down, and run back up. So I like to call that overall a bullish month for September. So DXY bullish. Now, if the DXY is bullish, I should see British pound be opposite to this, right? British pound should most likely be down, just based on correlation. Don't get ahead of yourself talking about, oh, I thought you said yen crosses are going to be bullish this month. We didn't say all of that. Based on the symmetrical market and how the market is coded, dollar is opposite from British pound and dollar's opposite from yen. So let's go take a look at what British pound is saying. So dollar's up. So we got yen. Scroll down. Yen futures, that's good. Look for September. It's down. So great. It's opposite from the DXY. I like to see that. So it checks off in correlation. Great. So let's move on. Now let's look at British pound. So dollar's up, yen is down. Great. British pound, pound FX. Here we go. September, it's down. There's some rallying down. So good. So the seasonal tendencies are telling me that they most likely will move in market symmetry or market code. It's not a non-symmetrical market, meaning that DXY and British pound and yen are all going in the same direction. If that was the case, this currency pair, GJ, would not make the list, or GU too. If we were looking at GU, it wouldn't make the list if they were all moving in the same direction. I would look for another pair. Hopefully that makes sense. So those are the 3 steps I take to filtering out the pairs. Now, when it comes down to the chart now, what I would do is I would set up my IPTA look back data range, right? This is just a step further outside of it. So we'll go to the daily chart. I think I already set it up too. Give me 1 second. I'm going to share the screen. I didn't forget. I'm getting better. Sometimes I forget, but I'm getting better at sharing the screen. There we go. I set it up the other day with the paid group. So I don't know the opening price yet, so I have to wait. But I could set up. If I had to clear it, this is how I do it. Come here to September. The first official trading day is September 2nd. We're going to go forward 20 bars. I'm going to go back 20 bars as well. Now I'm saying bars because since we're on the daily chart, each bar represents 1 day. I'm going to go back 40. And we're going to go back 60. There we go. Now I'm going to look for the highest high and lowest low in each one of these 3 quadrants. So this is 20-day, 40, 60. Let's get it on a chart. Make it look presentable, right? 60-day look back is here. The 40-day is here. Trading view. 40. And then 20's here. And another 20 here. Now, some people may ask, why are you putting the 20 forward, right? What's this cast forward? Why are you looking forward? What are you, a fortune teller, right? Do you know the future? I don't know the future, but I do know every 20 days, the market is going to either show us a new trend. Every 20 days. You see this little segment of time? It's a 20-day segment. Look at how it's trending up for 20 days. Look at that. And then the next 20 days, look at it's trending down. And then the next 20 days, it's trending up. Every 20 days. People don't know this stuff in trading. Every 20 days. It goes for any other asset class too. Crypto, precious metals, futures, FX. What else we got out there? Commodities. Every 20 days, the market is seeking new liquidity. There's going to be moments in time in a 20-day cycle, right? You're going to get this back and forth, something like that, back and forth price action. It's inevitable. You're going to get one. You're going to get probably one, at least one. I'm going to say at least one, but you're going to get a few months that are going to consolidate. And we can almost say that this month did consolidate here. You can see it's getting ready to break out. It's honestly getting ready to break out. I want to see it. I want to see traders get over optimistic on it. I'll tell you guys my speculations when we get into Monday. Let me not get ahead of myself again. But the highest high and lowest low in each one of this quadrant. So this would equal the 40 and 20-day low for those that are asking. This might be a question you might have. That's the 20 and 40-day low. They both share that. 40-day high is here. I don't know what the 20-day high is going to be because September could finish and close up higher, and that would be the new 20-day high. Or September 1st, 2nd, or the first official trading day for the month can open and close down, and then. But for now, I'll mark off what we have for now. Who's higher? 2-2, 2-2, 1-2, and 1-2. This is higher. So this would be the highest high that we have in the last 20 days so far. But if the next day, this is all I'm just saying, because I know sometimes it can be confusing. If the next candle opens and is higher than this one and closes up here, I'm going to shift this to be the next 20-day high, if that makes sense. Hopefully that does. So I can't mark this right now. This is holding the place value. That candle high would be the 20-day high. Odds are, I think we run that and we get another. I would have to replace the 20-day high. 60-day low here. Thank you, TradingView, for not clicking what I want you to click. And then 60-day high here. And that's our IPTA levels for GJ. So let's move this up to the top. I like to put what I'm working with at the top. So we were looking at EU, right? EU, say bye-bye, right? Trade, EU, going right back down to the majors. There you go. And it's done. Look at the sell signal. Man. Goated, man. Shout out to Larry Williams, bro. And GJ's up there. I got DXY up here. Useless. You can come back down here. I need that. Is this is a cat cross? I'm gonna delete that for now. I like to keep US oil up here because I like to glance at it as a correlation to DXY sometimes. And that's it. Majors, yen crosses. I'm very organized. Bond yields. Like to look at the bond yields too. The futures, right? Euro, yen, British pound, CAD, Swiss franc. Who is this? We got $2 New Zealand. Oh no, sorry, Aussie, New Zealand, similar flags. Real money. We got gold versus US dollar. We got gold versus Aussie. We got gold versus euro. We could have a lot more, but I thought these were the most important ones. And we got a couple of stocks and stuff. And that's it, right? Welcome to the end of August. Enjoy your week, guys. If there's any questions, please let me know now. We could go back and rehearse some of the ideas if anything was lost. If not, it'll be posted on YouTube later tonight. I should be able to get it to upload later tonight. Get this timestamps in, type out the segments for you guys so you can skip around. and you guys can always replay that. And I'm going to put it in the Forensic Forex playlist. So when you go on my YouTube channel, if you ever feel like, yo, Deontay, do you have a video about this or you have a video about that? I might have it. You just might have to look. And if you ask me, I don't mind sending it to you at all. But if you ever had the time to just glance over and just wonder, oh, what does Deontay have on his channel? Go to the playlist, right? Share this tab instead. Right? You go to the playlist, click playlist. I have a private playlist for growing cannabis and stuff. That's a locked one, right? You can't see that one. But yeah, I have a playlist here, right? We have the lessons from 2023. Like this is pretty much what makes me Deontay. This is pretty what makes me Forensic Forex and how I trade. This here. All these ideas, all the ideas that we talk about, outside bar, Sunday's opening price, the daily draw, right? Daily bias, premium versus discount, the New York model, entry technique for swing traders, monthly characteristics. We just went over that, right? But it's good to see present day examples. Forensic fork turning points. This is a smash candle video. This one here, the Larry Williams idea. Let's go back, right? Let's keep going. Let's go back. What else do we have here? We have the Asian session library, right? The Asian session model. We have over 40 plus examples. I could have continued with this series, but I said, man, I gave the guys, I gave the fellas 48 examples. Maybe I make it 50 one day just to even it out, make it nice, a nice number, but 48 examples of this model. So if you telling me you can't find profitability, there's no way. It's just no way. It's there. It's just you. It's user operator. It's you. The IPTA look back data range library, right? How we use IPTA. Some examples. I haven't updated it in a while, but those ones will definitely do the trick. Daily tracking 2023. I think we have also the daily tracking for 2024 here. Did I click it? There we go. So you see I did US oil in January. Amazing. Fantastic. We did AJ. We did EU. We did EU twice, actually. Oh, snap. AU, GU, UJ, U Swissy, and we did EU again recently. So now we're jumping into GJ. So now you guys know what pair we're looking at. Exceptional content, man. Thank you for the educator. You too, my man. Appreciate the nice comment. Thank you so much. Session was informative. Absolutely. No problem, guys. All right, guys. I'll see you guys Monday. Back I think Monday's a holiday, right? Labor Day weekend. So I think Monday the markets might be closed. I'm not sure. I gotta double check. But yeah, enjoy your weekend. Be safe. Do the right thing. Be a man. You guys know what to do. Be a great trader. Be successful. Be safe. Love. Peace.